Hi everyone, I'm Zeeshan. I look after Coinbase's operations in all of Europe and mostly our non-US markets. I oversee our businesses across those. I've got about 20 minutes, and I've actually got a deck that I'd put together to talk through today, but I've decided to change it up. And I was on a plane into London this morning reading Christine Lagarde's comments about the paper that the IMF has published about the pros and cons of a central bank-backed crypto asset. So I figured, well, that's topical, and that's something I've got thoughts on. So I've literally just made some raw comments on my phone on the plane that I'm going to be talking through. So this is going to be very spontaneous. I'm probably going to end up saying things that will get me in trouble with the PR team, but I think this will still be more enjoyable than some of the stuff I'd lined up. So for those that haven't seen that the news yet, Christine Lagarde from the IMF today in Singapore gave a speech about central bank-backed crypto assets, and frankly, most of it was quite positive. It was encouraging in the sense that she laid out pros and cons, and even with the cons, they laid out ways of solving that. So, what's the point of a central bank-backed crypto asset? So here's some of my raw thoughts. I think it's a good thing. I think a central bank-backed asset is actually a step in the right direction. And I feel like it's an endorsement of the technology, and it really is an acknowledgement of what of a future that's, in my opinion, imminent, where money is digital. So, and why do I say that? Well, I think when you look at I like walking around on the stage, and this is a fixed mic. When you look at the traditional financial system, much of the risk within the system today is, perfect, so much easier. Is this working? Yeah, perfect. So, yeah, I don't like hiding behind a podium. So, when you look at the traditional financial system, much of the risk today it stems from the fractional reserve model that we have. And a central bank issued coin, it essentially cuts out the retail banks. You can effectively go to the Bank of England, open an account, and store a digital pound with them. At least that's what the promise is. So what does that mean? I mean, by disintermediating retail banks, does this mean they're going to disappear? I don't think it will. I think, yes, they will need to go away and look for capital somewhere else, but I don't think retail banks will disappear. In fact, I think they will be forced to innovate, because now, they've traditionally been the gatekeepers, the de facto gatekeepers for the financial system. And if you wanted to access payments and anything really, you have to go to a bank and open a bank account. But when the big gorilla in the room, the central bank, steps in effectively as a competitor, I think retail banks will be forced to rethink their models. They will be forced to create value for consumers, not just by offering a standard account, but in other ways. And that value could be from higher interest rates. It could be from add-ons, services that they provide. It could even be from something like staking, if those accounts hold a proof-of-stake token. So I think whatever value proposition retail banks come with to entice you to save your money with them, I think there's two things for certain, in my opinion, with that. One, I don't think they're disappearing anytime soon. And two, I think the consumers are going to be the ultimate winners of this, because their products are going to improve. So the outcome here is the financial system, in my opinion, will become more efficient, accessible, and there'll be more competition between the retail and central banks. So surely that's a win, right? So that's one chain of thought. The other is around financial inclusion. So it's a term that's bandied around a lot within the context of crypto, and it is something that we as a business are quite passionate about. A lot of the decisions we make in terms of, and perhaps I'll touch on this quickly at the end of one of my slides, but a lot of the decisions we make as a business in terms of what we build, what we buy, what we partner with, they're very much based on some of our core values, and financial inclusion is one of them. So I think a digital currency, centralized or decentralized, it helps drive financial inclusion. And that's a goal that we're all pulling towards in this space. So a crypto asset inherently, it's easier to set up a wallet, right? If you look at some of the stats, 2 billion people without access to a bank account. 16 countries where less than 15% of the population has access to bank accounts. Now, in the same countries, some of them are touching 80% of the population with a mobile phone. So there's a huge gap in these markets which can very quickly be plugged by creating or moving the financial system away from traditional banks into crypto assets and wallets which can be delivered over your phone. So I think sort of a central banked cryptocurrency, it won't really be national, it wouldn't be sovereign. Crypto assets by their very nature are not. They'd be able to, there'll be a global asset, and it also has, outside of financial inclusion, it also has benefits for economies that suffer from hyperinflation. You could invest, people in Venezuela could go buy digital pounds and store, that's where they store their value from. So it actually creates a global market for just storage of value. And the players in that could be centralized banks, it could be retail banks, or it could be decentralized institutions as they exist today. So at this point, I feel like I'm an agent of the IMF in terms of promoting this vision. And I think I'll address the big centralized elephant in the room around that. I think the central bank, the whole ethos about burn the banks and, the financial system's broken, I get that, but I don't want to throw the baby out with the bathwater per se. I think the reality of this as it exists today is central banks are not going anywhere. Neither are retail banks. They are a fundamental core part of our system today. So it's a myth if people say that they're going away. I think what is happening, though, is there is a revolution in terms of what their role is in the ecosystem, and that's what's going to change. And Yanni in the previous talk mentioned that some of them will die, and I think that is true. The ones that don't innovate, don't keep up with customer expectations will disappear, but there will always be room for central banks and retail banks in this in the new world that we're creating. So crypto is, it is forcing the system. Oh, I've already talked about this. This is what happens when you have raw notes you've taken. So one thing that I think that central banks do, and why I'm a fan of what the IMF talked about today, is that it creates choice. It creates the option for customers in terms of where they store their value. So Bitcoin exists today. A lot of you might be holding your value in Bitcoin today as well. A lot of you might be holding your value in stablecoins or whatever other assets exist. But what it really does is it just gives us one more option. Now, why is this important? Why is a central bank-backed currency, this centralized model, why is that important? Well, I think one of the, an ironic twist to this is that a central bank-backed currency will actually drive adoption for decentralized currencies. So bear with me over here. What I mean by that is a centralized currency forces mass adoption. Like if tomorrow the Central Bank of England says, we're not printing any more pound notes, we're moving to a digital dollar, they have the sway to drive adoption in a way that just me standing on a stage pitching Bitcoin cannot do. So I think what they end up doing is they end up forcing adoption. And a central bank currency may be a few years down the line, but a step in the right direction will kick off a hive of activity in that space, particularly in the sense of building infrastructure around whether it be wallets, whether it be insurance policies, whatever that infrastructure is, it will start build. If it anticipates a central bank currency, there will be a lot of activity in that space. And the biggest win with that is this infrastructure is transferable. So it may be born for a centralized currency, but it will benefit and be usable for decentralized currencies in the same way. So think of it in the same way that Elon Musk thinks about electric cars, right? A charging station, if there's more adoption, there'll be more charging stations. And as a result, you'll be able to charge your Tesla in more places. So ultimately, it's a win if someone else comes out with an electric car. And I think central bank currencies really are a win in that sense, that the infrastructure that pops up will be very much transferable to decentralized currencies and will force mass adoption. If anything, it will lead to a world where people have a choice. You can store your value in a digital pound, or you can store it in Bitcoin or Ethereum, or whatever your choice of currency is. So, in my view, I think the case for central bank-backed currencies is actually the case for decentralized currencies too. So, the other thought I had around this was, well, what does that mean for stablecoins? Again, Yoni just before me touched on stablecoins as well, and there's a whole basket of stablecoins. And we announced a partnership of with Circle around our stablecoin, which is USDC, a few weeks ago. So that's a fiat-backed stablecoin, and if you have the Federal Reserve issuing a digital dollar, if you have the Bank of England issuing a digital pound, where does that leave the room for a Coinbase or center-backed stablecoin? Well, I think the answer to that is it doesn't, because what we're trying to do is we're trying to bridge a gap today between the fiat and the crypto world. But if the fiat world enters into the crypto space, then a fiat-backed crypto coin like ourselves, like USDC, I think it becomes redundant at that stage. But I'm also very cautious to say that from a stable coin point of view, it's only a fiat-backed coin that becomes redundant. Because as you start to think about choice and how people store their value, you have stable coins that are backed by commodities. If you want your wealth to be pegged to gold, you can do that. If you want it to be pegged to a basket of cryptocurrencies, you can do that too. So I think there is a central bank-backed crypto asset is incredible, but it doesn't change much. It helps move the message, the revolution in the right direction. And stablecoins will exist in parallel with that. But it's not a threat, and in fact, I feel like, if anything, it is a signal that this is picking up momentum when the governments and the central banks are starting to jump in. So that was all my thoughts around that. I'll quickly touch on how we at Coinbase are covering some of this stuff. I had all these shiny slides prepared, but I felt it was better talking about. So our role in today's ecosystem, we grew from a single wallet provider that that's a quick, easy on and off ramp into crypto, to this list of, I couldn't keep my slides updated quick enough as quickly as we were launching or buying businesses earlier this year. So we've grown into this group of businesses that represent a range of services. So I'll break them down in the sense that on this end of the spectrum, you have our retail proposition. That's our Coinbase consumer wallet. That's the thing that most people are familiar with. And we're trying to, on the retail side, we're trying to push adoption. So we are very much interested in the utility phase of crypto. So we're investing in businesses like Earn.com, which is a marketplace for tasks. We are Toshi, which has actually now been rebranded to Coinbase Wallet, but it's our decentralized wallet that's designed as a bit of an Ethereum browser. And then you start to move up into in the ecosystem to, say, merchant services. We've got Coinbase Commerce, that's like Stripe. It's a payment processor that allows you to accept crypto as payments. And then to the institutional side of the market, which is around our custody services, our prime offering, asset management, et cetera. So what we're trying to do as a business is accelerate what I think is maybe about 100 years worth of evolution into hopefully less than a decade, building all the building blocks that we think are necessary for mass adoption of crypto. And that's why me and the rest of the team come to work every day. That's me. Thank you very much for listening to me.
So we have a handful of questions, very much pointed. If you started by, frustrating your PR team, you might as well continue with these. So the first one would be, if central banks will issue their own digital currency, what will bridge the trades between those assets?
Well, isn't that very similar to what an FX platform does, just in a different type of asset, which is digital in this case? I don't think it'll be the realm of a particular type of business. It could range from anywhere from a crypto exchange to an FX trading platform in how you trade the asset. But that's the beauty of it. A digital dollar is far more easier to trade. You don't have custodians in the middle. It's a better asset in many ways, you know. So I think the answer to that is really anyone and everyone that is interested in it will be able to offer trading pairs around it.
Perfect. Next, when will Coinbase list the third crypto XRP? I warned Yoni that every Ripple-related question may result in a storm, but at your peril.
Well, breaking news today, we're not listing XRP. So I think in terms of XRP, I get asked this question all the time. There's a lot of infrastructure we have and we invest in terms of assets that we list. We have licenses, money transmission licenses in 40 states in the US. We have a BIT license in the state of New York. We just were granted a trust charter in the state of New York, effectively making us a bank. We have an e-money license here in Europe. We're going for licensing in Japan. And we have an insurance policy that covers a lot of our, so I don't think most people know, but 98% of our assets are stored in cold storage, and then the remaining 2% have a comprehensive insurance policy that covers it. So every time I have to list an asset, I need to go knock on all of these doors and have those people sign off on it. It's not that trivial. And well, you could say, well, you've listed another 5 assets in the last 6 months. If you look at the assets we've listed, they've all been based on chains that we've previously supported. So that means it's a quicker path to launch for us because we don't need to invest in building the vaults and the infrastructure around that. ERC20 tokens, they're relatively easy for us to list, and we've added BAT a few weeks ago. We're also in the process. We actually publicly shared the list of tokens that we'll be adding around that. So I think the answer to that is adding a new chain for us is not that easy. I think we will at some point be looking to list as many assets as we can. And I think, I don't know if you guys have seen, but XRP is supported in our custody product. So if you'd like to custody a reasonable amount of XRP with us, then we can cover that. But on the retail side, it's just not something we're ready to support today.
Well, next is, since the Coinbase IPO, what's the plan in terms of rolling out additional assets? And we might as well take a look at the rest of the questions, and you can afford yourself to pick and choose.
What? We had an IPO?
I'm not, I only write half of the fake questions, not all of them.
We haven't had an IPO. I did see it in the news. It was surprising. We just did a fundraise. We raised $300 million at a valuation of $8 billion. We announced it about 3 weeks ago. And I mean, a lot of it is about adding more assets. Look, there's a lot of assets out there that have significant market cap that we don't support today. So we're effectively not delivering a one-stop shop service to our customers. So, and that's what drives our roadmap. So as you may have seen, we've added a few assets in the last few weeks. We're working towards adding some more. And it'll be increasingly a focus of the business over the next year to provide you as many assets as we can.
Will central banks want to deal with all the administrative and technical overhead to support retail accounts, or will CBBC be institutionally focused?
I think one of the beauty of crypto is it can be very much, it can operate autonomously. So a central bank currency, or CBBC, doesn't need the same level of due diligence oversight that perhaps if it was issued, if the central bank was opening up bank accounts for retail customers would, as opposed to a crypto wallet account. So I don't think, A, I don't think it will be as resource heavy, but B, I think there's upsides and downsides. It depends on what you're optimizing for, right? If you're looking to take away some of the risk from the financial system today, then it's worth the investment. And I could argue that the CBBC, the central banks are starting to open up the settlement system. They gave a license to ClearBank, the first license to a clearing bank in, I think, 100 years or something. They're also starting to look at direct participation into payment schemes. So I think, you know, the mood is changing in that sense, and central banks are starting to play more of a role. And this is perhaps 2 steps removed from where they are today, but it seems like a natural path for them to take.
Fair enough. We have here the punters remain. Maybe I should have, you know, filtered questions. But anyways, I didn't do it. So how do you aim to improve the current user experience on Coinbase? It still takes days to purchase crypto with fiat. How do you aim to facilitate advancement?
So this was the single biggest thing that kept me up last year every night. It was, how do we improve? You know, it took a while to get people onboarded onto the platform. It shouldn't take days now. If it's taking you days, come talk to me. Something's not working as it should. So we're now plugged into faster payments. Your deposits into Coinbase should arrive via bank transfer in under 15 minutes. So should your withdrawals. Test it out. We onboard using third-party providers that do ID verification right there and then. So you should be able to sign up for a Coinbase account right there and make a deposit immediately. So you're looking at a matter of minutes to actually, or you can use a credit card or debit card to make a purchase. So I actually don't think we are at that point, you know, where it still takes several days to make a purchase. One side of this that I don't think people often appreciate is we opened a bank account with a big UK bank, Barclays. That made the front page of the Financial Times. You know, people open up bank accounts all day long. It's not news. But the reason why it made it is not easy to get the core infrastructure that's needed to give you the rails that offer the same experience as you would, say, I don't know, with your Tesco shopping, for example. It's in terms of our card relationships, in terms of our banking relationships, in terms of all the traditional financial system rails we need to deliver a seamless, fast experience, they're not very accessible. Now, the mood is changing. It's changed massively over the last 3 years, but it is a real challenge to get and to retain the right payments partners and bank accounts, and that's without any risk being passed through to them. So I guess a very long-winded way of saying, I hope we've fixed it so now you can buy within minutes, and B, we continue to invest in that infrastructure to make it even better. And I've actually got something lined up for later this year, which should make some of what I describe relatively instant. So keep your eyes open for. Going.
Okay, we have here why have you split institutional and retail clients between Coinbase Prime and Pro? A one-sentence answer is fair enough, I think.
Yep, different needs. So Pro is for the active trader. They're individuals. They want access to certain types of tools. And then you've got Prime, which is focused more towards our very large institutional clients. They have different needs. So previously we were using one platform to service a diverse group of users, and now we've split them out to focus on the use cases, the experiences that they actually need.
Incredible. Thank you very much. Put your hands together for Zeeshan.
Thank you very much.
He talked about an open financial system, and he was very open himself. That's not to be dismissed.